Good morning, everyone. Today is Thursday, March 9th, and I thank you so much for joining into our weekly PPACA webinars. As we mentioned, there's a lot of changes that are taking place. A lot just happened this week. So we're going to jump right into the agenda. I apologize that everything is so tiny. I only have, this one screen, and I'm trying to get everything in. So, again, hopefully you have your magnifying glasses out and you can see this. If you can't, certainly just give me a call or shoot me an email. I can email you the PowerPoint or this slide, etc. So let's just jump right into it. On Monday, the administration released the American Health Care Act. It's a repeal and replace bill. It was introduced Monday. We'll talk about a little bit about what's in it. It does eliminate the individual tax penalty and the employer mandate, so that's huge. Again, just maybe take a step back from that. The individual tax penalty was never substantial enough to change people's behavior. NAHU, the National Association of Health Underwriters, from the very beginning, even before the law was signed in 2010, were fighting for a higher tax penalty. Now, that might be counterproductive in a conservative sort of way, that you don't want people to have to pay a tax penalty for not doing something the government wants. But the way the law, Obamacare, was written was that everybody had to be in the pool to even make it close to being able to be worked. And again, that tax penalty was not large enough to affect behavior. So they're doing away with it, which hopefully means that it will open up the carriers to offer different plans, maybe lesser benefits, essential health benefits, not necessarily all being covered, maybe an option to have them covered or not. So hopefully this will allow the carriers, again, to be more creative and offer plans that are more attractive and more affordable. The employer mandate, of course, that's really going to affect the 50-plus market. I don't know with this current bill that was introduced if that means that measurement periods and the 1095s and 94s will be eliminated, and we'll kind of get into that in a few of the other points. But again, it's a good start. The bill does intend to expand HSAs by, pardon me, allowing for even more things to be paid for through your health savings account, and to increase the allowed annual contribution. So again, those are all positive. It does retain the pre-X condition protections. That's a big one that everybody's concerned about. I'm of a different mind. I hope that they, maybe bring back some form of medical underwriting for plans that may not, have all the bells and whistles. But if you're healthy enough to get through a quasi sort of underwritten plan, I don't think that underwriting is the worst thing. So again, at this point, it's protecting the pre-X condition parameters that are currently in the ACA law. Dependence to age 26, that remains unchanged. It repeals the Obamacare taxes in 2018 and freezes the money that is sent to the states in 2020. My assumption, and I didn't read the bill yet, but my assumption is that they're talking about the cost share reductions, there's risk corridors. So, again, that's all kind of positive. Here's the big one. Here's the big one that's getting a lot of criticism, one of the big ones. It replaces the subsidy, which officially are named advanced premium tax credits, with something outside the box, tax credits. So, again, that's one that that conservatives are really saying, listen, why are you replacing an advanced premium tax credit with a tax credit? It's the same thing. There was a calculation done by Allison Bell, who works with NAHU, and basically it would come out the same with the tax credits versus advanced premium tax credit subsidies. So again, I'm not sure that that's a big win for anyone. The government, of course, still has their hand in insurance and monitoring who gets tax credits and who does not. That means that there'd have to be some sort of reporting. So again, this one I'm not really happy about. But we'll see what comes out in the wash, and you know, because it is getting so much criticism, maybe that's a point where they can you know, maybe look at Rand Paul's and the Freedom Caucus's plan that that doesn't have those tax credits. They kind of do it in a different way. The tax credits would be tiered based on ages, 2,000 for those less than 60 and 4,000 for those over 60. They would phase out any subsidy or tax credit for those making $75,000 as a single or $150,000 as a family. It does retain the employer deduction for insurance premiums. This was a big one. There was information that they were going to have the employer exclusion, which basically meant that for the millions of people that are covered under an employer-sponsored plan that have a POP plan in place to have pre-tax deductions for any excess premiums. They were trying to eliminate that, which of course is costly to the employer, costly to the insureds as well. So it does retain that employer deduction, which is a good thing. Medicaid grants back to the states. This is another one that's getting a lot of criticism. This is a segment with this proposed bill that probably would feel the pinch the most, the Medicaid segment, because of the expansion under the ACA, Obamacare, you know, and taking that back, pulling that back a bit. Instead of the federal government giving money to the states to adhere to the increased Medicaid provisions, they would be giving grants to the states so the states could create their own sort of Medicaid programs. They would be paid, as proposed, a per head grant, if you will. So, you know, again, I don't know what that's going to mean for our state with a Democratic governor and a Democratic insurance department. So, you know, again, they want consumers to be protected, and I'm not sure that Pennsylvania and Medicaid will see tons of changes, except for the way it's paid for. A lot of things in it. You know, part of it is elimination of the need for major medical coverage to meet the ACA essential health benefits. You know, so there, again, there's a lot of things in here. Two House committees actually started going through the bill yesterday morning and marked it up. The House Ways and Means Commission did approve the bill with 154 markups, and that was approved along party lines, 23 to 16. The other committee, the House Energy and Commerce Committee, it's still under review. They've only had one markup thus far. So again, they're still being marked up. It seems to be moving pretty quickly. I have also reached out to the carriers to see specifically on the individual segment if any of these proposed changes have any effect on the way they're filing their plans for 2018, and I've gotten some mixed reviews on what that actually will mean. Again, my hope is that these carriers will have come to market with a product that's affordable outside of these metal levels, and you know, give something for you as agents to sell, pardon me, and something affordable for consumers to purchase. Excuse me, I had to take a drink. So that's it in a nutshell. I did include the copy of the bill in your handout, so you can see that. If you're not able to download it, just shoot me an email or give me a call, and I'll send you the link to the bill. My next bullet point is just don't forget about our complimentary offerings for group health, the summary of plan documents, the POP documents, the benefit notices, Cobra for those groups of 20 or more, and of course the HR360. So, you know, if you have questions about what we offer on the group side, please give me a call. Please give Elise or Thomas or Katrina a call. They can certainly walk you through all of our offerings, and I think you'll be very happy if you haven't taken a look at our offerings in the last 2 years. I think you would be pleasantly surprised to see what we're now doing on the group health side. So please, if you have questions, reach out to us. Grandmothering status, More details will follow, but of course the Pennsylvania Insurance Department has allowed the Pennsylvania groups to extend extend the grandmothering provisions out till 12/31 of 18. So more details will follow on that. IHC short-term product, there is a new message about the termination date of 12/31/17. If you recall, there is a House a resolution on the floor to delay or eliminate this less than 90-day short-term provision for any sales after 4/1, but at this point that has not gone through. So there are messages about, terminating those short-term plans 12/31. So any sales after 4/1 have to still be less than 90 days. We've not heard back from National General yet. There's nothing new on their site. IHC does have something on their site. Capital we've not heard back from yet, and of course Highmark pulled their short-term product. If any of you are interested in learning how to utilize the My URL tool from our website, Jim McDaniel is going to be running a 30-minute webinar on March 20th at 2 o'clock in the afternoon. He's going to show you how to look into our system and check on case statuses, contract statuses, commissions, etc. So for those of you that are on our site and are unfamiliar with that My URL feature, I think it's a good option to join into that webinar. I think it would be informative for you. And that brings us up to, thank goodness, I don't think my throat can survive more, but it brings us up to our open forum, and we'll open it up for questions. A friendly reminder that our next webinar will be Thursday the 16th. So let's see what kind of questions we have. We have a lot. When will tax penalties be removed, Dave asks. And that's a good question, Dave. There was something yesterday that I read where the bill actually has the elimination of the tax penalties in 2016. So people are wondering if that's retroactive, that's for the 2015 tax year paid in 16 or the 16 tax year paid in 17, which again is still timely. So I don't know the answer to that, but I would imagine as fast as this bill is being marked up, we'll get an answer quickly. At this point, I have nothing other than that they are being proposed to be removed. Will clients still need to enroll in HDHP to contribute to an HSA? My understanding is yes, David. I mean, that is the federal law, so I can't imagine that they would change that provision, but we'll keep watching for it. Will there be a means, a test for tax credits? Goodness knows, David, I hope not. I hope that we don't have to do any more certification and testing, and I imagine that that may happen, but at this point I have no information on yes or no whether we'll have to do testing. Margie asks, what will the penalties from the insurance companies for going longer than 90 days without health insurance? Isn't the penalty going from the government to the insurance companies? No, the tax penalties are that. It's a penalty it's a tax penalty, so it goes back to the federal government. Now, you know, that it could be loose money that they use some of those funds to pay for the cost share reductions. That I don't know. But as far as the 90 days, the 90 days without coverage, you can go without a tax penalty. And the tax penalty for a single is still $695 or 2.5% of your income, whichever is greater, if the tax penalty stands. Margie also asks, will insurance companies offer bare bone plans for those that only want limited plans? Again, Margie, I hope so. I can't imagine that they wouldn't, because if there's no tax penalty for not having quote-unquote qualified coverage according to government standards, then the insurance company should be able to offer plans that maybe meet the needs of more as opposed to one size fits all. Tracy says, do you think that the employer mandate being eliminated will wash away the 50-30 rule? Is there no mandate or fine that employers have no reason to follow that ruling? I also read that the reporting is still staying in effect. Yeah, I think it would stay in effect. Tracy, I'm not sure what you're talking about, the 50-30 rule. Maybe you can elaborate a little bit. And yeah, if there's no mandate or fines, employers have no reason to follow the ruling to offer coverage. Oh, I think you're meaning maybe the Part A penalty, which is minus the first 30. They'd be charged the $22.60 per insured. Yeah, again, if the employer mandate goes away, then that goes away. The employer is paying that tax or the penalty. But I agree with you about the reporting. If these advanced premium tax credits go to a tax credit, according to this law, there has to be some sort of mechanism in which the government can check if you have qualified coverage. So yeah, I hope that goes away, but at this point, I don't think it would. George says, with IHC, do you think agent commissions will return? What would be your expectation realistically? George, I would hope that commissions would come back, but I'm not optimistic about that, to tell you the truth. I think these carriers are, probably getting very comfortable without a lot of agent support. And I think that because of their losses that they say they have had, that the rates are not going to come down, bounce down as much as we'd hope. They are, part of this law is proposing that it's a 5-tier rating ratio, so they can charge older people more and younger people less. But I don't know, George. I just don't think that the insurance carriers are in this game, to tell you the truth. David says, by means test, I meant, will assets be considered as they are with Medicaid? That I don't know, Dave. Of course, with the ACA law, they were all supposed to go on MAGI, whether it's the tax penalty or tax subsidies or Medicaid. But that's not been a smooth transition, so I don't know. I don't have those details. And let's see. Mike says Cadillac tax still part of the revised mandate. It is, but it is to be that they delayed the onset of the Cadillac tax plan, I think until 2020. So I don't think that thing will ever take place, to tell you the truth, that Cadillac tax. George says, thank you for your honesty. Yeah, well, hey, George, I'm not here to try to blow smoke up anyone's skirt or pants. I'm just trying to let you know my thoughts. And one of the reactions I got from the insurance carrier this morning seems to be a little bit of a spin, and I don't know. We'll see what comes out of it. I just hope they're back in the game. And Dave says, will the America AHH have an adverse effect on group health plan and commissions? It's too early to tell, Dave. I don't know. I don't think group and commissions on group are going anywhere. I think what this law may do on the group side is create more, more options. And on the individual side, hopefully will create more options. I just don't hold out any hope that commissions really will come back on the individual side. And if they do, it probably won't be what they were, in 2010 for sure, or even 11 or 12. So we'll see. We'll see what comes of it. It's, we're certainly hoping for compensation as well. But again, who knows? I'll keep watching and keep letting you know what I know and what I hear, and you know, again, I appreciate all these questions. Keep them coming. And for now, that brings us up to the conclusion. And as always, I truly appreciate you joining in. Again, keep those questions coming, and we'll keep watching for you. Next week on the 16th, we'll be back here at 9:30, and I look forward to all of your questions and talking with you again. Have a great day, a great afternoon, and a great weekend. Bye-bye.